Hello and welcome to today's web seminar, another educational presentation brought to you by the transportation experts at Cline University. Today's topic is trucking payroll best practices, how to determine who is a contractor and who is an employee, and how to make the best decisions in a complicated environment. A little bit about the technology we'll be using today. All of your lines have been muted for the duration of the web seminar. However, you can enter any inquiries that you have via the question box or chat box, and we'll queue them up for the conclusion of the presentation. You can also slide the GoToWebinar box closed by clicking the orange arrow or double arrow, but do not click the black X or you will exit the web seminar. Now I'd like to introduce today's featured guest speaker. Mike Ritzema is the founder and president of Superior Trucking Payroll. He has 19 years of payroll experience and another 10 years of trucking finance experience. Formerly the CFO of a 75 truck fleet and brokerage. He's a member of multiple transportation associations and a deep subject matter expert on the topics we'll be talking about today. So without further ado, Mike, the floor is yours.
Thank you very much. I'm going to have John introduce me everywhere I go now. Today we're going to talk about 1099 versus W-2 for the driver. And then we're going to talk about if they are an employee, if they are a W-2, why to pay them per diem, how that helps you. And then we're going to talk about how to start paying per diem and problems that you're going to encounter, or hopefully won't encounter, but could encounter when you're starting to pay per diem for the first time. So for the determination, the things we need to know is who determines it and how they determine it and why it matters. It matters because there are extra costs of a W-2. Most of you already know this. This isn't going to be earth-shaking material right now. You have to pay payroll taxes on a W-2 on an employee versus a contractor. You have to pay the Social Security match, 7.65% of the first, more than a driver is going to make in a year. You have to pay state and federal unemployment on that driver as well. You also have to pay workers' compensation insurance. You have to cover that driver when he's an employee. That cost is significant. In trucking, it's one of the biggest expenses you're going to find. So it's important to make the determination correctly and then do what you can to minimize the costs from there. Who decides who is a W-2? I wish it was me. I wish it was you. I wish it was your driver. It's none of those. It's the IRS and the state governments. They're the ones who make the determination whether the driver is an employee or not. You can have a contract with the driver that says you are a contractor. The driver can willingly sign it saying, I am a contractor. And the IRS or the state can come in and say, oh no, you're an employee. The IRS uses a 20-point test. They also use other methods of determining whether someone is an employee or a contractor. There has been an emphasis lately in the last 4 or 5 years to turn drivers who were previously listed as contractors into employees by the governmental units. There's been things into state Senate committees. There was the Employee Misclassification Prevention Act that was brought up 3 or 4 years ago by a senator from Ohio and a congressman from California. It didn't get out of committee, but these things keep coming up. One of the reasons they keep coming up is that the one party favors unions and they want to put these people into the unions is what the other party will tell you, but also the government needs money. I'm in Michigan. As you probably all know, our biggest city is bankrupt. Our state is always looking for money, and everybody's moving out, but apparently me. And they need money to balance their budget, and so they're looking for that unemployment money. They're looking for not having to pay, the federal government and state not having to pay into Medicare for a driver who gets hurt but says he has no insurance when they could make it a work comp claim. There's things like that that happen all the time, and it's not going to go away, unfortunately. I wish it did. Now back to that 20-point test I was talking about. This next slide, this is the 20-point test in a summary form. We're not going to go over all this. This isn't a 4-hour webinar. We could easily spend that just on the 20-point test. There are 3 of them that I highlighted that I'm going to talk about, and I put this in here just so for those of you who ask for or receive the slides after the presentation, that it's all in there for you. It's not for us to go over right now. A couple things about the 20-point test, though. There isn't a magic number that gets you off the hook. Oh, if we are okay on 11 of these, but 9 of them were not okay, then it's a contractor. Or at such and such a number, it's an employee, and such a number, it's a contractor. It doesn't work that way. There's severities. Some of them are more important than others. There's also, if you're close on a few, but you really blow out a few of them one way or the other, that can affect the matter as well. There is no universal designation by the IRS that says a truck driver in this situation is a contractor and in this situation is an employee. They're not that industry specific. It would be nice if there was, so we could all be on the same page and we could all bid our loads competitively knowing that we're paying our drivers the same way. But that's not the world we live in. I guess lobby your congressman. But there are 3 that we want to talk about here. They're 14, 15, and 16. Number 14 is tools and equipment. Who provides the tools to do the job? The tools the truck driver uses mostly is the truck. If the motor carrier is providing the truck and paying for the fuel, then they're providing the tools and equipment. And that's just how that's going to work. If the driver brings his own truck, now he's providing the tools and equipment. Number 15 being significant investment, again, that's the truck. If the motor carrier is providing the truck and they're, again, providing the maintenance and all these kind of things, then the driver has no significant investment, so he would be considered an employee. Number 16, realizing profit and loss. If the truck breaks down, who pays for it? If it's the motor carrier, then the driver's probably an employee. I use he, by the way. It's he or she. Most drivers are he's. I'm not trying to be not sensitive to gender issues. Most drivers are he's, so please substitute he or she in any of those. If the driver is going to pay for the repairs, then you can make a case that the driver is a contractor. Some of you have seen lease purchase agreements. Those can work in the right circumstance, in the right state. They're pretty tricky. I would advise you to talk to your trucking attorney about setting that up rather than just trying to do it yourself. Some states don't even allow them. Some states, I think New York just had a new ruling about that. Again, your trucking attorney will know more about this than me. If you need a referral to one, I'm sure Cline Wood can refer you to one, or you could contact me and I could refer you to a trucking attorney. But it's pretty tricky. Those don't always get you out of it, is my point. They don't always make them contractors. I've had people suggest that you set up the driver as an LLC and then you pay the LLC instead of paying the driver directly to make him a contractor. That doesn't always work either. Again, if it's a single member LLC, it's still just the same person. It's still a sole proprietor. You're not solving the problem there. I wish it were true, and unfortunately it is not. So now that we've determined that a driver is an employee, and we're looking at all this, we've got this payroll tax that we got to pay now. We've got this workers' compensation premium that we've got to pay now. What can we do to minimize this? How can we pay as little as possible? Which is trucking. There's not all this extra money lying around, so we've got to minimize our expense. One of the biggest way that I know of that we can save on our workers' compensation premium is to pay per diem to the driver. Basically, what we're doing with per diem, the IRS allows $59 a day to be paid to a driver for meals and incidentals if he is subject to hours of service regulations, DOT hours, and he's in multiple meals and incidental markets. There's a lot of meals and incidental markets. All your over-the-road guys are going to qualify. What I want to do next is I want to go through an example of how paying per diem impacts the motor carrier and how it impacts the driver to just kind of illustrate how this is going to work. Here's a hypothetical situation. Your company has a 10% workers' comp rate. In Michigan, that would be very competitive. I can't speak for the states that all of you are in, but all the states are different. Your Cline Wood agent, I'm sure, can walk you through what this would be. I used a high marginal income tax rate because per diem is only 80% deductible, and I want to illustrate that you're going to pay the tax. I want to show you exactly where you're going to come out. And we just boiled it down to one driver. He's a solo. With 2,500 miles, you're paying him 35 cents a mile, and he was out for 5 days. As much as of a typical week as you're going to find in trucking, there is no typical week, as we all know, but this is going to have to do for now. Both times, you're paying the driver his rate times his miles. 2,500 miles times 35 cents a mile. What we're doing in the next line is we're taking out the per diem. This is how much you deduct on your taxes. This is for the company, for the wage. The per diem is you can only deduct $236 of the $295 in per diem, so you're paying tax on this $59 here. At the 39% marginal tax rate, again, that's pretty high. I hope you're all there. Good. You're going to pay $20 tax. But you're going to save $22.57 on your Social Security match. So you're almost break even. You're 44 cents off right there. But you're at that 10% workers' comp rate, on the $295 that you paid per diem on, it's not subject to workers' compensation. $29.50 you just saved on that driver in that week. Add those three numbers together, $29.06 that you save per driver per week by paying per diem. You might be thinking, $29 sounds great. I'm paying 40, 50, 60, 80,000, 100,000 in workers' comp. $30 doesn't do it. Well, when you add it up, I used 28 drivers in the example. You can obviously substitute your number in. $29.06 a week times 28 drivers times 52 weeks is $42,000 in workers' compensation premium savings in the year. That's a lot of money. As a finance person, we don't often get to save companies money like that. So we're pretty happy. You know, salespeople get to bring in things, and there's other people that can do things to save you money. In the finance department, we're usually considered to be admin. If we can save you 42 grand, we're going to feel pretty good about ourselves, and everybody should. And it's $42,000 that we can save. Now let's talk about the driver. Typically, if the company's making money, and if something that affects the driver loses money. There's only so much money to be divvied up. That's not the case here. Because of the per diem, they're only paying tax if they have per diem. They're only selling the driver in the same scenario, same driver, same miles, same rate, is only going to pay tax on the $580. He's going to pay less Social Security. He's going to pay less federal income tax. He's going to pay less state income tax. We give him the per diem back at the bottom because we took it out at the top. He gets $74.65 more in his check by paying per diem. It's the biggest raise a driver is ever going to get. I mean, $74.65. That's a lot of money. That's in your check every week. That's taking it home. I wish I could offer that kind of good news to everybody every week. Now, how do you start paying per diem? One of the biggest things you want to do is you want to talk to your drivers. You want to sit them down as much as you can. I understand that you don't all have your drivers in one place at one time. But you want to sit them down and walk them through how it's going to work. You want to say, okay, if you don't know about per diem, and most of the veteran drivers will, you say, we're going to take $59 a day of your pay, and we're going to basically make it non-taxable. And you show them two check stubs. You say, here's one with per diem, here's one without per diem. Which one do you want? Most drivers, especially drivers under 40 who don't believe they're going to collect Social Security anyway, are going to be, yeah, give me more money. Give me more money. I want more money. It's a pretty easy decision. So you really want to talk to them about it. Some drivers are going to have concerns about this, and I'll go through those concerns here in a few slides. But if you talk to them and you hear their concerns, you should be able to convince them that it's a good idea to take per diem. There are some cases when it doesn't, and I will cover those. It doesn't make sense for them to take per diem, and for those people, I would let them opt out of it because it's not worth losing a driver to save $30 a week. I wish it was, but it's not. It's a bad business decision to lose the driver, especially a good driver, because we all know how hard drivers are to find. The next thing I would tell you is when you're paying per diem, you're subtracting money out, taxing them out, giving the money back. You need to make sure the amount you take out and the amount you put back are the same. If you take out too much and forget to put some back, your drivers are going to be up in arms and they're going to think that you're stealing from them, and you've all heard these stories. All these drivers have had bad experiences at former employers, and that's just a headache you don't want to have. If you pay them back more than you took out, you're just giving away money. The drivers hopefully will tell you, some of them in my experience, some of them will tell you and some of them will not. Then you've got to go try and recover the money and you have the whole thing again. So it's really important that you do that. Another thing is you want to pay per diem by the day. The IRS allows $59 a day for per diem. Some trucking companies will pay it as a percentage. Oh, we pay 30% or 1/3 of their pay or some other number. We just make that per diem. Or some say, well, we pay the driver 35 cents a mile, but we pay him 28 cents as wage, and we pay them 7 cents as per diem. Well, it's easy to calculate, and I can understand that part of it. The problem is you're doing one of two things, and maybe even both. You're either not paying them enough per diem, so you're not taking advantage of the possible workers' comp savings, or you're paying them too much per diem, and now you're running away from the IRS laws. I don't like saying things are illegal because that implies intent, and it's not like that, but you could get yourself in trouble for paying too much per diem, and now all that stuff becomes taxable, it's subject to Social Security, and you got to make up both sides, and it just becomes a mess. So why not just pay it by the day and maximize your benefit and stay 100% compliant with the law? There are a lot of companies that pay it as a part per mile just because it's easier for them systematically, and I would suggest to them that they change their system. It'll pay for itself. We've gone through the savings here. Here's some problems that people are going to have with per diem. Some drivers, again, mostly the veteran drivers, if you're not paying per diem now, they're probably deducting it on their income taxes through Form 2106, which goes into your other deductions on your Schedule A. That works, but you're not getting the full benefit of it. For that driver who is getting $74.65 a week, it's about $3,880 a year that he's getting in the year as additional net pay. Typically, again, everybody's situation is different, but because of the limitations of unreimbursed employee expenses and the fact that it typically for most states not deductible on their state income tax, and that they're still paying the extra Social Security, he's trading, if he doesn't take per diem and deducts it at the end of the year, he's trading his $3,800 during the year for about $1,500 to $1,600 next year. It's a bad, bad deal. I'd rather have the money now, and I'd rather have twice as much. So that you should, again, when they sit down, because they're going to be skeptical about you changing something, you can show them this and say, look, it doesn't work that way. The driver's 1040s will also look, they won't show as making as much money because it's non-taxable. For most drivers, for companies that pay per diem, they lose about 30% to 35% of their wage because it's not taxable. Now, they're still getting the money, but when they go to apply for a mortgage or go to apply for a car, trying to get credit, and they want to look at the W-2s, it can be an issue. My general advice, everybody's situation is different, of course. My general advice in that kind of situation is if they're really that tight on their credit, they shouldn't probably buy the thing they're trying to buy. But that answer never goes over well. It's just telling people how it is, and most people don't want to hear that. Work with, I've seen lenders that will acknowledge that you get reimbursed for expenses every week, and they'll work with you on that. But some won't, and that's unfortunate, but you're getting that extra $75 a week. Use that money to pay down, save up to put more on your down payment on your car so you don't need to show the income, or more on your house, things like that. Some drivers are coming up on retirement. They can see it coming. It's at the end of the road. And they're concerned that they're going to get less Social Security benefits because they're paying less into the system now. They have a point on this one. If you have a driver who's in his early 60s, and he's like, I don't want to have my benefits cut. I've been paying in for 40 years. These are the years that are really going to build up for me. What I would do with that driver, if he's a good driver, I'd have a policy that's uniform for everyone, but if I felt like those were my good drivers, I would just not do per diem with him. I would tell him he could opt out. I wouldn't want to lose the driver over it. And in his case, he actually has a pretty decent beef for why he would want to do that. Again, you can do the actuarial math, and you can see what it would all. You're probably not going to convince him. So those guys I would let opt out. Of course, that's every company can make their own decision. The last thing is work comp claims. The work comp claims are going to be paid. On the example, we had 875 as the top line, and then 580 was the work comp and the taxable gross. The work comp claims for lost wages are going to be paid on that 580 instead of the 875. So your driver is going to get less money when he files a work comp claim. I don't see that as a problem or an obstacle. I've not met trucking companies that were upset about that, but I wanted to point that out that was going to happen. You're paying less premium, there's going to be less benefit paid out. That just makes sense. That's just how it goes. Everybody else has other problems with per diem. Everybody has different obstacles that they have to overcome. Everybody's situation is different. What I would encourage you to do is we're going to open this up to some questions that some of you have typed in or sent to the webinar. If you have other questions or you feel your problem is more specific, feel free to contact me. My contact information is on this slide. Let me know, here's my situation. What should we do? I'd be happy to talk to you about it. We don't charge for consultations. We're just trying to help trucking companies do better things. So is Cline Wood, for that matter, since they're offering this webinar to you. We're just trying to educate trucking companies so they can be more successful. And if they're more successful, then obviously the rising tide is going to lift all of us that help the trucking companies. So that's our goal. If you have a particular problem or you have some other unique circumstance or something you wouldn't want to send as a question here, feel free to contact us. We're happy to help you. We're here to service trucking companies. That pretty well covers what I was trying to cover today. I wanted to leave a few minutes for questions. So John, if there are any questions at this point, fire away.
Thank you very much, Mike, and we really appreciate you sharing all that important information, and would love to thank Clinewood University for sponsoring today's web seminar as well, and for our very large audience who attended today. Very, very few people have left. Everybody stayed the whole time, showing the importance of this topic. And we do have many questions, and we're also going to make it as easy as we can for you to get more information, either from Mike and Superior Trucking Payroll, or from Clinewood University by launching a poll right now. Please let us know if you'd like a copy of the slides, info from Clinewood, info from Superior Trucking Payroll, or if you'd like to discuss your trucking insurance coverages. We'll leave that poll open for 2 to 3 minutes as we begin getting into the questions that have come in from today's audience. The first question we have is, will per diem stand up in a workers' comp audit?
Yes, it will. I do audits for a lot of our clients. They just have the auditor come here. What you want to do is you want to talk to your Clinewood agent and make sure that what your policy allows for per diem. While the IRS allows $59, there are some insurers and there are some states that only allow, I think it's NCCI average, which is $38 a day. So if that's the case, then you only want to pay $38 a day in per diem because you're still maximizing your savings. Your drivers will gain 2/3 of what they would have gained. So they'll get $50 a week instead of $75. And you'll save, instead of saving $29 a week, you're going to save $20. But you're still, again, $20 a week a driver is a significant savings. So it's still worth doing. But you really want to work with your insurance agent, and you really want a trucking insurance agent because they're the ones who are going to understand this. And so I can advise you strongly, work with your agent at Clinewood and have them show you exactly what's allowed in your policy. And then set up your plan to work with, set up your payroll plan to work with that limitation so that you don't get a surprise at the audit. I've seen it happen before where they do the $59 a day and then they're with an insurer, they're in a state that's only $38 a day, and at the audit, they still get hit with this big unexpected premium. Nobody likes unexpected surprises, especially when you owe money. So that would be my advice, would be to work with your agent.
Thanks, Mike. And I see that about 2/3 of our audience has already responded to the poll. If anybody else would like to respond, we're going to be closing it in about 10 seconds. The next question we have is, where can I find something from the IRS that explains how they allow per diem?
The IRS periodically updates their guidance on this. There is a link on my website at truckingpayroll.com. If you go to the links, you'll see per diem guidance from the IRS on the links. Just click on that. It's going to bring you right there. It is from a couple years ago. They don't change it. They don't update it often. They update the rates every 5 or 6 years, but it'll say right in there, when you go to that link, you're going to want to go down to Section 4, which is specific rules for the transportation industry. And that's really the part that's going to interest you. If all this sounds too hard to get to, email me, and I will email it to you, and I'll even send you right to where you need to be within the 5 or 6 pages of the IRS guidance, and just for the special rules in the transportation industry. I can get you right there if there's any kind of problems. But you know, it is IRS blessed, and the 2 qualifications they list are must be subject to DOT hours of service regulations. They don't say the guy has to log. They just say he's got to be subject to hours of service. And they also say that the driver must be in multiple meals and incidental markets. Again, that's pretty easy to get to if you're out in the middle of the prairie and you only go to other prairie stops, then that's going to be an issue. But if you're going into a city, then you're fine. And so another thing that you would learn if you read that, and hopefully you all get the chance to read it, will be partial days count as full day per diem. If you send a driver out tonight at 4 o'clock, he's been home all day. Send him out at 4 or 5 o'clock tonight and send him on an over-the-road run. You can count today as a per diem day, which, again, the 5 days per diem, and I use the example, that's probably going to be low. And for every day of per diem you can pay, you're going to save more money, and you're going to put more money in your driver's pocket, which is really a good recruiting and retention tool that you're showing your drivers, we're doing everything we can to get you as much money as we can. So again, if go to our website at truckingpayroll.com and go to the links and you'll see it, or email me and I'll point you right to it.
Well, thank you once again, Mike, for sharing that important info, and thank you again, Cline Wood, for bringing this webinar today. With that, today's web seminar is now ending. We thank you all for taking time out of your day to visit with us. We hope you enjoy the rest of your day, and please be looking for future Cline Wood University web seminars.